Hey everyone, and welcome. Look, if you are just starting out and feeling completely overwhelmed by all the financial noise out there, the crazy charts, the shouting TV hosts, the endless sea of red and green arrows, you are exactly where you need to be. Today, we're diving into a full explainer on wealth construction, breaking down what's called the Smart Investor's Blueprint. We're going to completely demystify how real investing works, especially if you're a total beginner. Because let's be real, there is a massive difference between what trends on social media and what actually builds long-term security. So we're stripping away the jargon, looking right at the facts, and laying out a super clear path. Let's get right into it.
Okay, let's dive into this. There's this classic saying, most men work 40 years for money, smart men make money work for them. To really wrap our heads around this, imagine walking into your favorite local bakery at like 4 in the morning. If you're the one in the back, physically kneading the heavy dough, shaping the loaves, and pulling them out of a blistering hot oven every single day, well, you're working for your money. If you get sick and stop kneading, the bread stops baking and the cash completely stops flowing. You are directly trading your physical energy for a paycheck. But what if you own the oven? That oven is baking bread 24/7. It doesn't matter if you're sleeping, chilling on a beach, or watching this explainer. The oven represents your investments. When you invest, your dollars basically become these tiny, dedicated employees working tirelessly in the background. And that is exactly what making your money work for you actually means.
Section 1. Making money work for you and the psychological shift it takes to get there. Shifting your mindset from being the person laboring for cash to being the person utilizing capital, honestly, is the absolute foundational step for any beginner. It's a total rewiring of how you look at a single dollar bill. You gotta stop seeing money just as something you spend and start seeing it as a tool that can be deployed to build more wealth. Think of it like the difference between a treadmill and an escalator. On that traditional path of working 40 years for money, you're on the treadmill. You run, you sweat, you get paid. You step off, the machine completely stops. Your earning potential is literally capped by your physical energy and the hours in a day. Now, making money work for you is the escalator. This is where your past effort, the money you systematically saved and invested, starts generating its own upward momentum. It compounds. It grows without you breaking a sweat. For a beginner, the ultimate goal is just to slowly transition your life off that exhausting treadmill and steadily build up your own escalator.
Section 2. The hot stock mistake, and exactly how to avoid the trap. Now, as you start trying to build up that escalator, there's a trap. A giant, flashing neon-lit trap that catches almost every single beginner. The one major error keeping well-intentioned folks broke is chasing hot stocks. You know the ones? The random company everyone is suddenly screaming about online. The stock that supposedly shot up 300% yesterday. Guys, chasing hot stocks is literally like wildly sprinting down a platform after a high-speed train that already left the station. You're running as fast as you can, you're sweating, you're desperately throwing your hard-earned cash at the empty tracks, but the train is miles away. You just end up totally exhausted, empty-handed, and stuck on a cold platform while everyone who calmly bought a ticket early is already enjoying the ride. It's a frantic, losing game, and you absolutely do not have to play it.
Section 3. Why news equals missed profits and the massive danger of hype.
We live in this era of just unprecedented social media hype. You scroll for 5 minutes, and suddenly your neighbor, your dentist, and your distant uncle are all certified financial gurus pitching the next big thing. Let's move to and see how this builds. Because if you're waiting for the screaming crowd to tell you what to do, you're practically guaranteeing you'll miss out on the actual, meaningful growth. We can track exactly how this plays out. Step 1. A stock starts growing quietly. Smart, patient investors are buying in, and there's zero fanfare. Step 2. Momentum builds. People in financial circles start chatting about it, and those early investors are seeing real gains. Step 3. The news finally hits your feed with some flashy all-caps headline. And then, the tragic Step 4. You furiously buy in, but the biggest profits are already totally gone. Actually, a lot of times, you're just blindly buying the exact shares that those smart investors from Step 1 are actively selling to cash out. If you wait for the news, you are at the absolute back of the line. We call this the latecomers trap. Buying into an asset only after everyone else is already buzzing about it. Imagine showing up to a massive, highly anticipated pizza party. You burst through the door, wearing a party hat, happily paying this huge premium cover charge just to get inside, only to realize the music is off, everyone's putting on their coats, and there's absolutely nothing left in the cardboard boxes but some grease stains and a sad, cold piece of crust. That is exactly what you're doing to your financial future when you buy into hype. You are paying a full-price, premium cover charge just to eat the crust. No way!
Section 4. The real investor's focus and the true blueprint. Let's leave that broke mindset completely behind. Toss out those empty pizza boxes. So, the crucial point is, what is the actual blueprint? It rests on 3 unshakable pillars: strong companies, patience, and long-term growth. Honestly, it's wonderfully, beautifully boring. Real investing isn't about buying magic beans from some guy on the internet and hoping a giant beanstalk sprouts overnight. It's about planting a strong oak tree. First, you pick a healthy acorn. That represents a solid company making real products with real profits. You plant it in good soil. And then, you aggressively apply pillar number 2, which is patience. You don't dig up the acorn every Tuesday morning just to see if it's growing. You leave it alone. And over the years, that unbothered patience leads directly to pillar 3, long-term growth. Eventually, that mighty oak provides a massive canopy of shade for you, your kids, and maybe even their kids.
Section 5. Building wealth year by year because it's a marathon, not a sprint.
If you only take away one single thing from this explainer, let it be this: real investing is a marathon, not a sprint. It is absolutely crucial for beginners to ground themselves in realistic time frames. When you realize that true wealth is measured in decades, not days, the daily panic of the stock market just kind of melts away. And this brilliantly illustrates the massive difference. The amount of wealth built in a single day is incredibly tiny. Trying to strike it rich overnight with a lucky guess usually ends with almost nothing, or worse, losing what you started with. But look at that mountain of wealth generated by making smart decisions every single year. Wealth isn't a scratch-off lottery ticket you buy on a whim. It's the compounding result of sensible, quiet choices, year after year. It's adding a little to your investments, letting that escalator carry it up, and just repeating the process. Let this core tenet from the blueprint really sink in. Remember, wealth isn't built in a day. It's built by making smart decisions every year. If you're feeling behind right now, or if you feel this intense pressure to catch up quickly by doing something crazy risky, just take a deep breath. You have time. You really do. You don't need a hot stock tip to be successful. You just need a sound strategy, a focus on strong companies, and the patience to let your money do the heavy lifting in the background. Think back to our bakery. You don't build a massive industrial oven in an hour. You build it slowly, deliberately, brick by brick, until it's ready to bake for you endlessly.
So I'm going to leave you with this powerful question, something you should ask yourself every single time you look at your finances. Are you working for your money, or is your money working for you? If you are totally relying on your own physical labor on that endless treadmill, it's time to start planting some oak trees. Stop chasing departing trains, dodge that latecomer's trap for sure, and focus entirely on the long game. If you found this blueprint helpful, make sure to follow for more, because we'll keep breaking down exactly how to build real lasting wealth. Thanks for joining me for this explainer, and I'll see you next time.